Howdy out there, folks. This is Darius Dale here to present our macro minute for Tuesday, March 8th, 2022. Starting with markets, we have stocks mixed this morning with US and Europe leading, Asia lagging, commodities up, crypto up, dollar up, global bond yields up. Somewhat of a reflation kind of day on the EU headline that they're floating a sort of Green New Deal and a large defense spending bill backed by sort of sovereign debt. So we'll get more updates on that over the coming week. Big movers this morning at Shanghai Composite out of China and Japan's Nikkei 225 index, both off 2% apiece. WTI and Bitcoin up nearly 3% apiece. Ethereum up around 4%. And then big reflation day in the bond yields. 10-year bond, 10-year gilt yield out of the UK, 10-year treasury yield. Each of those were up 7 to 9 basis points apiece. And then net gas off 5%. On the macro front, today's February NFIB Small Business Optimism Survey data confirmed low to median income businesses are succumbing to the inflation monster and pulling back on expansion plans. These data are a stark reminder that the celebrated dynamism of the U.S. economy works in both directions. We continue to pound the table that global capital markets have yet to fully price in the growth scare our models see developing by mid-year. So looking at the unpacking the NFIB data, we had the higher prices index tick up to 68. That's an all-time high. Fewer or no qualified applicants for job openings ticked up to 57. That's the highest we've seen since October. Job openings hard to fill ticked up to 48. That's the highest we've seen in a couple of months. And then taking it to the chart here, we had the headline NFIB index tick down to 95.7. That's the lowest print we've seen since January of 2021. Hiring plans that ticked down to 19. That's the lowest print we've seen since February 2021. Compensation plans tick down to 26. That's the lowest print we've seen since May 21. And then we saw CapEx plans tick down to 27. Again, that's the lowest print we've seen since July 21. So very clearly rolling off the cycle peak for all of these individual curves, and they do not point to a more robust growth outlook. If anything, they point to a confirmation of our dour view as it relates to the U.S. economy over the medium and long term. With respect to today's probable range setups, still getting overbought signal in WTI, Euro 5-year forward inflation swap, silver, gold, and the Bloomberg Dollar Index. Oversold signal, 10-year JGB yield still, 10-year TIPS yield. All those oversold signals and bond yields we caught out late last week definitely had some impact in market this week. So pay attention. S&P 500, that is still bearish FAMs, are bearish from the perspective of our volatility adjusted momentum signal with minus 5.9% of downside versus 5.2% of upside in its probable range. WTI minus 30% of downside is at the upper boundary of its probable range. That's still neutral VAMs there. OVX is just ripping. Bloomberg Dollar Index still bullish VAMs minus 2.2% downside, and it's at the upper boundary of its probable range this morning. 10-year Treasury yield minus 7 basis points of downside versus 36 basis points of upside. Still bullish from the perspective of our volatility adjusted momentum signal there. Bitcoin still bearish VAMs minus 18% of downside versus 8% of upside. Ethereum bearish fam still minus 19% of downside versus 12% of upside. And then lastly, gold still neutral VAMs, 10-year tip shield, which is our volatility adjustment for gold in that model is still not sufficiently broken down yet. But gold still neutral VAMs minus 8% of downside or it's at the upper boundary of its probable range. So with that, Darius Dale presenting our macro minute for Tuesday, March 8th, 2022. And then for all you 42 macro bundle and macro scouting report subscribers, we'll be having our March 22 macro scouting report out this afternoon. So looking forward to that. Cheers.